Hi guys, welcome back to the channel. My name is Dave, and today we're going to be talking about MSTY from Yieldmax, and we're going to try to demystify MSTY because I get asked about this one quite a bit, and it's a rather controversial product because it yields 136% at the moment. Now, how do I know this? Well, because it's splashed all across the website. Now, I realize that this is one of those ETFs that's a little off limits, right? Criticism for or against will be met with a boatload of negative comments about not understanding math or ruining dreams of 100% gains on an annual basis. At least the nice people, they'll respond, the typical way.
No offense, but you are a stupid asshole.
So whether you are a fan of MSTY or you hate it, this is my review. So either way, watch the whole thing before you post something because I might surprise you in the end. You just don't know. Just like Michael Coe surprised me on Friday with this.
We were just talking about Bitcoin. I bought a little MSTY. This is the Microstrategy Options Overwriting ETF from Yieldmax. Don't just look at the price of this thing. It's not just a capital appreciation story. It pays a massive dividend because of those high options premiums.
Very interesting. Not heard of that before.
So MSTY, if that is what you're looking for, please stick around. Whoop. You guys remember that game Myst from the 90s? This is not that because, well, it's spelled wrong, but it's close. But it does make me think back to that stupid addictive game. My wife loved this thing. Released back in 1993. Everybody seemed to love it, but I was more of a Doom guy, and that was also released in 1993. So I was playing that in the Chem E labs at Ohio State, and I was apparently better at killing monsters than solving puzzles. Anyway, stay focused, Dave. Now, according to Seeking Alpha, this only yields 127%, not 136% like they have over there on Yieldmax. So who's lying now? Is it even worth buying? Okay, we're not doing this for the yield, guys. I wouldn't do that. This is a synthetic option ETF based upon MicroStrategy stock. So let's start with what really matters here, and that's MSTR, because without it, we have nothing. Now, as you likely know, MicroStrategy is the company run by Michael Saylor. He's a very interesting figure, and this was a software company that focused on data analysis. But back in August of 2020, they bought some Bitcoin. And what did they do? They put it on the balance sheet, and they started to accumulate Bitcoin, and that's what they've been doing over the last several years. Now, this is clearly a controversial plan, but it's worked out really well as we've seen Bitcoin climb in value over the last several years, at least since August of 2020. So people love this or they hate it. What do you think? And for transparency, I do own Bitcoin, but I do not own any MSTR stock. And the general idea behind putting Bitcoin on the balance sheet is simply as a hedge against inflation and our affinity here in the United States to continuously print more money. So we have hard money over here represented by Bitcoin, put it on the balance sheet. You continue to print money. My Bitcoin, in theory, should go up in value if you believe it actually has value. Now, this is where MSTR gets pretty interesting to me. So how do they buy all this Bitcoin? Well, they can fund their purchases with debt or equity. They've been using debt. They've been using this rather ingenious idea of issuing convertible notes at a 0% interest rate. So what's the attraction for investors? Well, if you're a fixed income investor, there's not a lot of options out there to get exposure to Bitcoin, but now you have the opportunity to do that through MSTR. Now you have to be a little bit orange-pilled or have a belief in Bitcoin that it's not going to go to zero, because in that case you have problems with bankruptcy and losing all of your investment. But if you just believe Bitcoin is going to do what it does and be really volatile, then this can be a good option for you. Let's say you invest $100,000 into some of these notes. You should be principally protected. If it just trades sideways, you'll get that back, right? You don't lose anything. But these convertible notes have a convert price. Let's say that's it. Let's say you did this at 100 and it's at 150. Just use example numbers. Let's say this thing, MSTR goes to 200 as an example. You can convert at 150 your stock, and you can turn around and sell that stock because it's at 200. And your $100,000 investment, look, you just made $50,000. So from a fixed income investor standpoint, if you want exposure to Bitcoin and you want to mitigate some risk, still bankruptcy risk, this could be a pretty interesting option for you. Now, from an MSTR perspective, what do? We just raised a bunch of money by issuing all these convertible notes. What are we going to do with that? Let's go buy some more Bitcoin, right? And in a sense, now we've become a levered Bitcoin play. And when I say levered Bitcoin play, this is a good time to start talking about volatility and options a little bit, because that is what this MSTY is all about. So let's make some quick comparisons. Let's think about volatility and start with a boring old stock like Coca-Cola stock. Okay, so IV for June 20th options is around that 15 to 25%, right? Pretty mild volatility, kind of boring. It's all right, but pretty mild. Now compare that to straight up spot Bitcoin options, which started trading late last year. And when they first came to market, volatility was around 60. But now it's settled down a little bit to around 40 to 45 for these current June 20th contracts. And in this case, I'm using IBIT, which is just a spot Bitcoin ETP if you're not familiar. So still quite spicy. But if we compare that to MSTR, which I say is similar but levered, we are looking at implied volatility around 60 to 70%. So that's pretty extreme volatility, significantly more volatility, which I suspect is primarily from the leverage. Now, this could work for you or against you. This isn't to say one way or another. I have nothing against volatility, but this thing will certainly move, and it ties directly into that giant billboard sign that we started with that says 136% yield. Come on in, folks. Now, as of May 2025, when I'm making this video, MSTR currently owns 568,840 of the Bitcoin that are out there. And that represents about 2.7% of the Bitcoin supply. That could be its own problem at the end of all of this. So first of all, are you a fan of MSTR and the strategy, and are you a fan of Bitcoin? We'll do it like basic programming. So if answer equals no, you probably go and watch something like fainting goat videos. That's always entertaining. If answer equals yes, then let's jump over to the website here at Yieldmax and take a closer look at MSTY. All right. Let's jump over to Yieldmax and check out MSTY. Now, I have reviewed a few different products from Yieldmax. I do not own any of them currently. They don't really play well with what I'm trying to do. That doesn't mean they're not right for you. I'm not here to bag on Yieldmax or anything like that. They're very proud of their distribution rate. They splash that right on there, but that's also because they are income funds. They're there to generate yield in the first place, but yield will be directly proportional to the volatility in the products. That's why I kind of started with that volatility discussion on MSTY. It's one of the reasons that it's such a large distributor of income, because of all that volatility in this particular product being MSTR. Now, the fund itself does not invest directly in MSTR. It's all done synthetically through an option position. We'll get into more of that. But whether you do any of these there's single issuer risk, if you do any of these Yieldmax and it's on a single stock, you better love that stock and have a reason for buying into that using this. Now, they do have some funds that combine several of these together. That might be a better strategy, and it's always interesting to kind of look back and see what performance has been like when we have the ups and downs in the market with option strategies. When we're on a market that's continuing to climb higher and higher consistently, like a bull market, then these will not shine. In a sideways to downward market, these might outshine the underlying. Okay, so anyway. Scroll down, distribution details come next. Again, this is an income fund. That's what they're going to splash on here. So distributions of late have been anywhere from $1 to $4 on a stock or an ETF that trades at about 23 bucks a share currently. So that's how we end up with 136%. Fund inception for this particular fund is 2/21 of 24, so a little over a year old now. So we are getting some history on it. Expense ratio, I'm not a big fan of the expense ratio because it's right around 1%. So that's very expensive for any ETF. If you get up to that, there better be a good reason for you to put it in your portfolio and spend that much, because that will eat you up over time. We're going to break down the holdings here in a minute. And I certainly say if you're like, I love this thing, I'm going in, check out the prospectus and read through the investment profile that they have in there, because that'll give you some information as well that you can really draw upon. So you're going to hear from me. We're going to talk about the holdings, because that's what it boils down to. And we're going to break those down. You can scroll down and see the holdings down here, but you can also download these, and that's what I did, into a spreadsheet, so we can kind of get a better idea of exactly what it is, and I can kind of walk through those holdings a little bit better that way. So here are the current holdings for MSTY as of 5/16/2025. You can download these from the website, and you can always check out their option positioning. So I highlighted some things so we can kind of break this down a little bit. Now for a deeper explanation or a more thorough explanation of a synthetic long position like we're going to be talking about here, if you're not familiar with options, you can watch that video from TSLY because I went into more detail and added graphics and everything. But for this, I'm just going to kind of mumble through some of it and hopefully give a basic explanation of what it's like. So yellow up here goes with yellow down here. Together they form a position that acts as if you own the shares. Whereas green here goes with green up here and again acts as if you own these shares. So you see 82,000 and 82,000, that matches up. You see the strike price 390 with 390 and the same expiration, and this is what creates a synthetic position. So when you buy all these call options at 390, it costs a lot of money, but you can finance that by selling puts, the shorts, negative versus the positive here. So it kind of funds one funds the other, and it doesn't cost a lot to do it. Now it probably does cost a little bit because of the upward pressure on MSTR, but you get to make some of that back because this doesn't cost you a lot. You get to keep a lot of money in cash. That's what all this stuff is in here. So by sitting in cash, they're collecting some money as well. So that can finance part of this call that probably is a little bit more expensive as well. So when I say you're a direct participant in whatever happens with the option, if you think about expiration on 6/20 of 25, if this call option, or let's say MSTR, is at 391, you get $1, right? Because it's worth $1. If it goes up $5, you get $5, right? So it's profitable. You might have made $5. Whereas on the put side, it's because it's above it, it's 395. This is worthless, right? This is a piece of junk. But the opposite is true as well. If it goes down to 385, you're a full participant in that as well, and you lose $5 on the put, and this is worthless. So it acts as if you own the shares. So yellow acts as if you own the shares, green acts as if you own the shares, and the next component to this is selling calls against these virtual shares that you own, right? Because you're a full participant, then you can sell shares against that. So MSTR, I put down here, currently it's just under 400 as it closed on 5/16. So they had a bunch that was expiring on 5/16, right? They have all of these right here from 4/17 to 4/65. These would all expire worthless, right? Because they're out of the money. So as of yesterday, these still had these values associated with it, and they will now be zero. They went to zero. That's a good thing because they would have to pay to close out these positions. So I imagine they let these expire and they kept all that money for the fun. Good job. This last one here is a positive number on these calls. That means they're converting this not from just sold calls, but into a call credit spread. They went further out of the money, bought some calls, and so they're going to lose this money. But overall, it did pretty well yesterday with MSTR staying below their strike prices. So that's one example. Then the next week, they've got some here on 5/23, 13,000 contracts, currently pretty far out of the money, looking pretty good. Then they've got these ones that go out to 5/25, again, looking pretty good at the moment. All those are out of the money currently. So if these expire, they get to keep all that income. That's their distributable income. If, for example, MSTR takes off, well, they're going to make money on this side because they are acting as if they own the shares. So these calls, down here, these calls become profitable. Puts expire, but they make money on this side. They act as if they own the shares, whereas they could start to lose money on the options in that case. But since they have some room between here and that strike price, there is profitability in there because they're selling out of the money. So they have somebody back there managing, pulling the strings, managing these option positions, and you have to have some trust with those guys that they're doing a good job in managing these positions for you with MSTR. But that's pretty much it. We sit in cash, we act as if we own shares, and then we sell all these calls against them, sometimes converting to a call credit spread. And through this process, they're trying to generate as much income as they can, and that's what gets distributed out to everybody. It makes everybody so happy that they're making 137%. Now let's jump over to Seeking Alpha and take a look at MSTY. And by the way, I am a Seeking Alpha affiliate, so if you are looking for a stock and ETF research tool, check the link down in the description for a nice discount to get you started. In my humble opinion, seeking alpha is the best way I have found to research alternative ETFs like MSTY and just get viewpoints and analysis from all types of talented authors. You can see that down here. Hold, sell, hold, buy, right? Anything you need to reinforce your particular opinion. So check it out. It's a really great, useful tool. Expense ratio, 99.99%. Let's round up to 1%. Not great. I wish that was better. I wish they could improve that. That would make it maybe a little bit more attractive for me. They do pay you every single month. People love that. Yield currently shows here on Seeking Alpha 132%. Give or take. What are you going to do? So let's think about this from a performance perspective over the last year versus similar products. So as far as the strategy goes, how has performance been during the last year? Let's compare to a spot Bitcoin ETP like IBIT and the underlying stock MSTR. So pull that up here and we're going to look at total return. So as we know, Bitcoin has had another good year over the last 12 months. If a stock or ETF has had a good year and it's up a bunch, you should expect a levered play using the underlying to have an even better year. That's what Bitcoin to MSTR is. And that's exactly what we see here when we look at MSTR. So MSTR over the last 12 months, total return up 177%. Outstanding. Congratulations to those that have owned MSTR. MSTY, it's also up nicely. But the use of the option strategy has negated a large amount of the growth of Microstrategy, right? So up only 113% during a year when the underlying was up a lot. Those calls held back that return a little bit. So how do you feel about that? And don't say one word about yield, right? I don't want to hear about yield. This has nothing to do with yield. You could take VOO in a year that it was up 160%, and you could make an ETF that spun off a bunch of yield, and you know what you would have? VOO with a lot of yield. Good enough. Anyway, during the same period, if you just owned IBIT by itself, up 59%. So again, congratulations to IBIT holders. So overall, these three products have performed very well in a year when Bitcoin, the underlying, has performed well. Now, perhaps a better test of MSTY will be in a year when MSTR trades sideways or declines, and we'll see outperformance maybe during this period with MSTY. However, as I look at some of the other products from Yieldmax using a similar option strategy, I'm hard-pressed to find outperformance from a Yieldmax comparable ETF. So I think that's an important factor and something that I bring up in a lot of my videos. When we sell calls, covered calls, we tend to underperform over the long term, and especially in a bull market. And with markets that tend to go up and to the right, we will have underperformance when you look at total return with a lot of these covered call strategies. So let's see if my covered call theory holds true and compare some Yieldmax products that are single stock ETFs to some of the underlying stocks that they follow. So just to look at a few, let's start with Tesla. TSLY was up 97% over last year. TSLY was up 32%. So gross underperformance in that case. And all these charts are total returns. So yes, all distributions are reinvested. How about NVIDIA? NVIDIA was up 42% over last year, while NVDY was up 24%. That's the Yieldmax version. Now, all three of these mentioned so far were winners over last year, meaning the stock rose considerably. So how about some stocks that did not perform well over last year? The only Mag 7 stock down over last year, I believe, was Alphabet or Google. So how did Goog do compared to GUI, Gooy from Yieldmax? Well, Goog was down about 4.5%, while GUI was down 8.5%. So not looking good for the option strategy in that case. And let's not forget that 1% expense ratio. I know I bring it up a lot, but that still has to be paid out of this total return chart where the straight stock has a expense ratio of 0%, right? That's the nice thing about just buying the stock. And finally, how about AMD? AMD was a turd over the last year as far as performance. It was down nearly 28%. but AMDY from Yieldmax was down 20%. So we finally do have a Yieldmax winner here where we see the option strategy paying dividends, pun intended. Let's not forget, when we look at total return is all that matters in the end. You can always sell some shares. I know people don't like to hear that, but that's the truth. There can be tax advantages with ETFs and return of capital for some people, so I get that. I made a whole video. I dived into that heavily in this video. I'll link to that here. So I know what might be an argument for some and the attractiveness of return of capital, but it has to make sense for you and your situation. Anyway, I get it. I'm the destroyer of dreams, the destroyer of yield.
Do you like school this year?
That's okay. So, do you like school this year? That's seriously what you sound like. Just shut up.
But can this be used in a portfolio? Is this a buy or a pass? Well, I'm probably more in the camp with this guy over on Seeking Alpha that's talking about I would own MSTR, which I don't, and I would write calls strategically. However, that's not always feasible for everyone. Buying 100 shares of MSTR right now would cost about $40,000, so I'd rather plunk down $23 for a share of MSTY. I get it. Now, what I tend to do, and I put it in this video, is I buy IBIT and I sell options. So you can create your own leveraged instrument that way and stay away from both of them. And that's probably where I will continue to trade. That's been a very profitable trade for me since IBIT came to start trading options. So that's the way I go. You could also go the costless option like Yieldmax, and then you could set up a synthetic long and sell calls against it. But then you have to have that background. You have to have that understanding of how options work. So that has its own risks. So what is the common everyday income investor supposed to do? Well, I have a couple suggestions for this very alternative product, MSTY, that offers all this yield. I guess the first one is it's based upon MSTR. So if you're a fan of Bitcoin and Microstrategy, then be long the stock. Just be long. Go out and buy some MSTR and then surround it with what you consider the best-in-class income ETFs. We've talked about a bunch of them here on this channel so that I can subscribe. That would be one approach that I might take. But if you're really adamant about having MSTY in your portfolio, understand there's risk and it's an alternative product. Keep your exposure relatively low, and you could pair this up with MSTR as well. So you're going to be long MSTR because you're a fan of that underlying, and that's a kind of a prerequisite. And then you want to add MSTY to offer some of that yield and a little bit of a hedge against your MSTR position. I think that could work. Now, I'm not a buyer of this one. I think I've got better options myself to go with, and I prefer to have my Bitcoin exposure through owning Bitcoin itself or owning IBIT and utilizing options that way. So any questions on any of this, please ask down below. Like and subscribe if you like this type of content, and we will see you next time. Have a great night. Whoop.